Good afternoon, ladies and gentlemen. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another live analysis session. Now, we do have an important event today. We also have an important event tomorrow. We've got a lot of market volatility because of the earnings season and because of the quarterly earnings report by NVIDIA over the night. However, there is today a lot of different setups that we're going to be looking at. So today, as part of today's live analysis session, we're going to be looking at trade setups that potentially we can look at for one of the most traded assets, including gold, the Nasdaq, the Euro USD, the British pound against the Japanese yen, which is actually one of the most popular assets, specifically amongst professional traders. So we're going to be looking at real setup, the real bias in the market. We're going to be looking at areas within the market where actually the bias will switch from potentially a bullish bias to a bearish bias. And we're going to be looking at what is driving this price movement, what events are potentially going to change the projections for the assets as well. Because we are, of course, going to be looking at projections. So I've got a lot of individuals here which are saying, should we buy or should we sell? Let's look at the assets together. Let's analyze the markets together. So then you will be able to get a good understanding of how exactly to predetermine how the market is potentially likely to move. So the first asset that we're going to be looking at is gold. Now, gold, if we're looking at the past few months, really has had amazing opportunity for mean reversion strategies because we've got a lot of assets that mainly have been trending. If we're looking at the Nasdaq, massively trending, the US dollar massively trending. Whereas if we've been looking at gold, gold has actually been forming a reversed ascending triangle. Real ideal market conditions for range bound trading conditions and mean reversion as well. However, ladies and gentlemen, there is a lot of factors in regards to gold which is changing and which are about to change. Yes, we've definitely seen a lot of volatility and a nice upward price trend here over the past week and a half, which is measuring almost 3%, ladies and gentlemen, which is quite a lot for gold, which is a safe haven asset. However, it's still very much within the range-bound conditions. So what exactly are we looking at when we're looking at the price of gold, and is it going to break out of this reoccurring price range? Now, of course, it's not going to break out of the reoccurring price range without seeing some kind of a retracement at some point. However, there's been a lot of changes within the market, which is providing us potential indications that actually the price of gold is going to slowly break out of this reoccurring pattern. The first thing we, of course, need to take into consideration when we look at traditional price action, an asset doesn't remain within price ranges and a reoccurring traditional range within the market forever. It may last a week, it may last a month, it may last 6 months. However, it will not stay there forever. And also keep in mind, if it stayed within a reoccurring price range forever, every trader out there will be a very successful trader because it'll be very easy to trade. That's not the conditions that we see within the market, though. Now, if we're looking at the reoccurring price range, it has been within a reoccurring price range throughout the whole of the summer months. It's been in a reoccurring price range throughout the whole of May, June, July, and August as well. So it's been 4 months that we've been within this reoccurring price range. Now, we definitely have a bullish bias. We can see we're trading above most moving averages. If we're looking at even more advanced indications such as the dome, such as the depth of market, or a very good tool, the volume weighted average price. If we look at the volume weighted average price on the daily statistic over the past week, on every single day we have been trading above the volume weighted average price, which is very important as well. So we have a lot of indications giving us a bias towards the upward price movements. Now, there's a few reasons for this. Now, if we go back 2 weeks, we of course had a much better scenario in the market. We really started to see a feel-good phenomenon within the market because there was the negotiations and the meeting between Trump and Putin. Those negotiations, we had a lot of positive comments because of that, we saw some really good positive price movements within the stock market, especially within certain stocks as well. And we had a higher risk appetite within the market because a big issue and risk to the market, not just today and not just in 2025, but over the past 3 years, has been the conflict between Russia and Ukraine. Now, there was a real feel good phenomenon at that point. However, now it's been almost 2 weeks and there's been no progress in any way, shape, or form. So the fact that there's had that meeting, people maybe got slightly more confident than they should have, but now it's been 2 weeks and nothing has actually happened in any way, shape, or form. Not even the slightest, such as, for example, a meeting between Zelensky and President Putin himself. Because that hasn't happened, the risk appetite of the market is rapidly changing in favor again of a lower risk appetite of the market, which supports the price of gold. So that's one factor that we have to keep into consideration. Another factor is that we've got tariffs again on India. India is one of the largest economies within the world. It's one of the BRICS nations as well. It's deemed to be one of the fastest growing economies as well. A 50% tariff on India is definitely creating a lot of friction and again supporting the price of gold, because the more uncomfortable in countries and governments and central banks become with the authorities in America, they will look to mitigate away from the US dollar. And that is what has been happening since the Ukraine war. A lot of central banks, a lot of governments have been mitigating away from US based assets. So this is of course something which is also supporting the price of gold because it creates risk within the market. We also have had an announcement just 3 hours ago that Mexico will also apply tariffs on China. Now, of course, they're doing this because they want better terms and trade deals with the United States of America. But nonetheless, that's creating a lot of friction in the global economy as well. Now, all of this is creating a weaker US dollar. We have to keep in mind as well that there is a very high possibility that it's going to be an interest rate cut in September. Most analysts and economists believe that there's going to be at least two 0.25% interest rate cuts in 2025. So the remaining 4 months of 2025. So because of that, it can pressure the US dollar quite a lot and supports the price of gold. So let's look at this, ladies and gentlemen. Like I said, at the moment we've got a bias for gold and its upward price movement. Now, if we switch over to a 2-hour time frame, we can definitely see really strong upward price movement. We have very clear higher highs and very clear higher lows. We're above our trend line here, which is the 75-bar exponential moving average. Now, when we're looking at the 2-hour time frame and we're looking at moving averages, the most popular moving averages is the 75-bar exponential moving average, which is known as a trend line, and also a 100-bar simple moving average, which is known as a price sentiment indication. Both of those are indicating upward price movement. And if we're looking at the latest crossover is also a positive crossover. And it has consecutively been increasing in value. We can see very clearly higher highs. Now, another indication that we can also add to the 2-hour time frame is a relative strength index. A lot of people opt to have it on an 18 period. If we're looking at the relative strength index, is currently just under the 65 mark. So very clearly giving us an indication that buyers are controlling the market. So ladies and gentlemen, this is indicating very clearly upward price movements. We of course have to take into consideration that there's going to be the gross domestic product of the United States of America. That's going to be released in 4 minutes time, ladies and gentlemen. Now, depending on that announcement, if we're going to get a significantly lower gross domestic product, again, it can trigger a risk off appetite within the market, which supports the price of gold. If you get a lower GDP figure, it applies further pressure on the Federal Reserve to cut interest rates. Again, that supports the price of gold and has a negative effect on the price of the US dollar. So if we're going to get an announcement like that, then of course we're likely to see the momentum of gold, bullish momentum of gold, continue to increase in value. And I'm actually going to switch over to a smaller time frame so we can look at a potential setup. So that's something, of course, we need to take into consideration. Now, we want to, of course, trade gold where we're about to see momentum being regained. Now, we can potentially look at the price slightly higher than the current price to ensure that we're entering at a point of momentum being regained. So, for example, traders may look to enter at this area here, which is the current breakout level. Now, what traders also can do if they wish is to open free trades more or less at the same price. So, for example, here I've got free trades more or less at the same price. And then what I'll do is I'll look on the first trade to have an earlier exit. So, for example, here at a 0.20%, then I'll look at a medium exit, so 0.30%, and then I'll look at an exit which is significantly further away. So, for example, 0.5% away. 0.5% away, most likely we're looking at a day trade position. So, I'm keeping the trade open for at least 24 hours. So, for example, on these trades and this trade setup, we can be looking at 3 different exit points. Now, keep in mind, we're looking at the entry points being more or less the same, ladies and gentlemen. So we're not looking to scale in, we're looking only to scale out. So let's look at this as a setup. So we said 0.20, which is basically here. And then the exit points for the second trade there. And then we said 0.5% away here. Now, the benefit of having scaling out is that you can have multiple exit points. So, for example, ladies and gentlemen, if we're going to see a price movement, which isn't a very strong price movement, and we're just going to see a price movement do this and then completely collapse like so, and then hit our stop loss, for example. If we put this take profit all the way up here, it wouldn't have hit our take profits. We would have been in profitable trades, but then all 3 trades would hit our stop loss. Whereas doing this approach, ladies and gentlemen, yes, one of the trades would hit a stop loss, but at least we have 2 trades which are in a take profit and have completely closed with a profit. So because of that, we may be at a break-even point, we may be at a slight profit, we may be at a slight loss, but it's a significantly better scenario than if we would be having just a take profit, which is significantly further away. Now, for traders looking to potentially see a scenario where, because the price of gold has been increasing in value for a week now, maybe we're at a point where we're about to get a correction of retracement before we get a continuation of the upward price movement. Now, if we get a very, very strong GDP figure, and we also get tomorrow really high inflation figures from the US, then that will be a scenario where the price of gold can come under a lot of pressure. And as it comes under a lot of pressure, we may look at the price trading downwards. Now, if we're going to get a crossover of our let's put a 200 bar moving average here, or should we say 150? There we go. So if we're going to get crossover downwards, and we're going to get a bearish breakout, which is a breakout of this low here, ladies and gentlemen, then we can start speculating downward price movement. Of course, keep in mind, it will take some time for that price to start to come downwards. As it starts to come downwards, this will continue to increase. So most likely that bearish breakout point will be breaking below the 150 bar simple moving average. Now let's go to our website. If you go to our website, ladies and gentlemen, and you go on tools and education, and you go on economic calendar, you can actually see the announcement which has been made. So let's go on to today's calendar. I'm going to remove all countries. I'll only keep the United States of America on our calendar so we can see the announcement which has been made. Now, the announcement, ladies and gentlemen, we can see here is significantly higher than that which was expected. So we were expecting to see the GDP figure increase from 3% to 3.1%. It increased by 3.3%, and also the weekly unemployment claims was 1,000 individuals lower than previously expected, and 5,000 individuals lower than the previously expected. So this, ladies and gentlemen, does support the price of gold decreasing in value. Now, the benefit of this, ladies and gentlemen, is that we can now potentially switch over to a smaller time frame, such as a 5-minute time frame, maybe a 2 minute, a 1 minute, a 3 minute, a 4 minutes. For this scenario, I'll look at a 3-minute time frame. We can switch and we can look at the area where the price will actually start to look towards and start to see sell signals materialize. So keep this in mind, ladies and gentlemen. Now, if we're going to switch below this, ladies and gentlemen, then we're going to see sell signals start to materialize. And that will also be supported by what we're seeing from fundamental analysis for the day. Okay? But we of course have to keep in mind that regardless of that, and regardless of this downward price movement, which is a downward price movement of 0.22%, if we measured previous downward price movements, 0.23%, you can very clearly see that this is just the traditional downward price movement we have seen. So even though we've got price movement in favor of gold decreasing in value, so far the downward price movement is only giving us an indication of a decline, of a retracement. So somebody here says the mobile app is not working for me. Guys, if the mobile app is not working, keep in mind that we have a support team which is available 24 hours a day. So you can message them either through the live chat on our website and they will answer straight away. It won't be a robot which answers, it will be a real person. Alternatively, you can speak to them on the phone or you can speak to them by email. I would recommend email because, of course, it's much faster and easier and we can give you a better service and be more responsive if we're speaking on live chat or on the phone itself. So I've got some questions very quickly. Somebody says, which moving averages I've been using? On the 2-hour, we used a 75-bar exponential and also a 100-bar simple moving average. On the smaller time frame here, we're using a 150-bar simple moving average. I've got another question here. Please, can someone say to me what is the best time frame? It also depends on what kind of trading approach you're looking at. If you're looking at short-term trading, I can see somebody here says the 2-hour, 4-hour, and 15 minutes. 2-hour and 4-hour in terms of analysis are known to be one of the most beneficial time frames in terms of analysis. But in terms of entering trades, if you're looking at entering and exiting within 24 hours, then actually 15 minutes is deemed to be quite a large time frame. Whereas a lot of traders looking at entering and closing the trade within a few minutes or a few hours, they again a lot of the time tend to opt for the 3-minute time frame, the 4 minutes, the 5 minutes, the 6 minutes, and that gives us a much better entry point. Now, if we are going to see, because we always need to be prepared for an alternative. We said, ladies and gentlemen, that potentially we're going to see the price of gold decline because of the announcement which has just been made. We also said that if it declines below the 150-bar simple moving average, that may be an area where it will start to see sell signals materialize. Keep in mind that moving average will continue to keep on moving upwards for at least half an hour or so. But we have to look at a different scenario as well. So, for example, if we're going to see upward price movement start to gain. Now, if this is a retracement, normally traders will deem if 61% is regained or more than 61%, then actually the buy trade is being triggered. Excuse me, is being triggered. Now, if the buy trade is being triggered, there's different areas that we can look at. Some individuals look at the breakout, which is this area here. So that's the breakout point. Some individuals, like I said, will look at 61% of momentum being regained, which is at this first green line here. And if we want a third trade, we can look at the mean, so the average between the two, which will be in the middle there, ladies and gentlemen. So that will put us in a scenario where we can actually start to scale in as well. Now, what I would say though, if we are going to trade upwards, but at the same time, the news which has been announced is actually something which is negative for the price of gold, then what we need to be cautious of is actually not putting our take profits too far away. And that way, we are not going to be at risk of missing our take profits. So, if that's a scenario, ladies and gentlemen, where you want to potentially look at, we can look at take profits which are closer. Now, you can look at maybe two take profits where the first two exit on the first take profit and then the second one exits on the take profit which is further away. Now this is something of course we're going to continue to monitor, ladies and gentlemen. What we definitely will see here is a reaction in the price of the US dollar. And we can see this reaction, ladies and gentlemen, here. So price of the US dollar index has been terrible, generally speaking, today. But we did see some upward price movements. Not a lot of upward price movement. Keep in mind, this is a 3-minute time frame, ladies and gentlemen. So we've got an upward price movement of 0.13%. That started to decline 0.8% now. Now, in regards to gold, keep in mind, gold is simultaneously correlated with the US dollar, and it's an inverse correlation. So if the US dollar increases, gold decreases. So also, we've got a lot of people here saying, shall I sell gold? Shall I sell gold? Shall I sell gold? Of course, the announcement is negative for gold. So it can potentially give us an indication that actually, yes, gold may decline. But if we look at technical analysis, it's indicating that the decline will only be temporary. But if we are able to get the US dollar significantly increase in value, then that will validate our signal that yes, indeed, the US dollar is indicating that gold will decrease in value. And that's something, of course, that we can continue to look at throughout the day. What a lot of traders also look at is the performance of the market, generally speaking. So, for example, for the day, the worst performing currency is the US dollar. So you can see here all the performances of different currencies. The best performing currency of the day is the euro, the Australian dollar, Canadian dollar, and Japanese yen. The worst performing is the US dollar. So while the worst performing is the US dollar, are individuals really comfortable to speculate that gold will decrease in value? Of course, if it's a retracement, the retracement will always happen throughout the day. So if we speculate in just a retracement and it's ultra short term, because the retracement is, then of course that's absolutely fine. But if we're looking at strong price movement, prolonged price movement, actual trend, then we don't yet, generally speaking, have an indication of such a price movement. And also, if we're looking at price movements of metals, generally speaking, all metals are increasing in value, all of them today. Palladium, silver is increasing in value, gold is increasing, even copper, ladies and gentlemen, is increasing in value. So that's of course something that we need to take into consideration. And as I'm saying that, guys, just as I'm saying it, we can see the price of the US dollar just suddenly declined here. So haven't seen that yet on the price of gold. What you can also look at throughout the day is if the US dollar starts to decrease in value again. So for example, if it decreases to here, all right? And then if we look at gold, if we see gold also continues to decrease, maybe it will decrease to our trend line, which is approximately here, ladies and gentlemen. If that continues to be a scenario that we see, where gold and silver traditionally has an inverse correlated relationship, but it's not following it at the moment, then that may be an indication that actually gold is trading under its intrinsic value and actually is oversold and potentially can be increasing the value going forward. So that's a scenario that potentially we will look at as well. Something that we'll continue to monitor though, ladies and gentlemen. Just as I'm speaking about that, of course, we can see here suddenly a bullish candlestick forms, a 0.08% bullish candlestick has just formed. But of course, very early on, something that we'll keep on monitoring. Now, another big factor, ladies and gentlemen, is the stock markets. Big news within the market, of course, has been Nvidia. Now, Nvidia, ladies and gentlemen, is the most influential stock for the S&P 500, and it's also the most influential stock for the Nasdaq. It is an impactful stock for the Dow Jones, but it's not one of the most influential. Now, Nvidia beat its earnings expectation. It beat its revenue expectation as well. But there was certain comments which didn't give the confidence of investors to necessarily continue to purchase at such a high price. Because if we're looking at Nvidia, Nvidia has been increasing in value and is currently trading approximately 34% up in 2025. And we don't forget, I've had the stock market crash in 2025. So they've outlived the stock market crash and they're also trading almost 35% upwards this year. For investors to really feel comfortable to continue to purchase at such a high price. And of course, they want really strong earnings data. Earnings data just about beat expectations, and that applies to revenue as well. At the same time, there was certain concern in the comments by the board of directors relating to restrictions on China, which is a very important, very important market for them. Now, if we're looking at the Nasdaq, ladies and gentlemen, it's again forming an ascending triangle. So we can see we're seeing higher highs. Sorry, we're seeing higher lows, but we're not seeing higher highs. So you can see here very clearly we're forming an ascending triangle. We are trading though above both moving averages. We are trading above the 50 on the RSI. We're currently trading just above the 60 mark. Not seeing any divergence, but we are at a point of resistance. A positive point, though, ladies and gentlemen, is that we've had some good data from the gross domestic product. What the Nasdaq really would like to see, something which will be massively positive for the Nasdaq and the S&P 500 and the Dow Jones, is that tomorrow's core PCE price index, which is the most favorited inflation reading for the Federal Reserve, if they're released tomorrow, it reads lower than 0.3%. 0.3% is the current expectation, which is way too high, ladies and gentlemen. If it's at 0.3%, then we are at a risk of, again, not necessarily returning to hyperinflation, but seeing inflation rise to, for example, areas that we can see in the UK. So seeing inflation rise to somewhere between 3 to 4%, which is outside of the target of the Federal Reserve. Now, if we can get that coming lower than expected, if it comes in, for example, at 0.1%, 0.2%, then that again will really start to support the Nasdaq and S&P 500. Because something which is very important for the Nasdaq and S&P 500 is that we're going to see interest rate cuts in 2025, at least 2 interest rate cuts in 2025. Now, we know there's going to be rate cuts in 2026 because Jerome Powell will leave office. Trump, of course, will put somebody else in office, which is more in line with the Trump policies. Definitely very trigger happy on interest rate cuts. And we already know potentially who the new chairman of the Federal Reserve is going to be. So because of that, ladies and gentlemen, we know there's going to be cuts in 2026. But what's important is that we get cuts in 2025. If we're going to get a lower core PCE price index, then that's a very good indication of us seeing cuts. Now, if we look at the price movement, the only concern here that we have, ladies and gentlemen, is that we've got definitely a resistance point here. We've got partially a resistance point here, partially a resistance point here. So we're at the point of resistance. So we need to be cautious of that. So when we're looking at a 3-minute time frame, ladies and gentlemen, and we're trading and speculating upward price movement, again, we can look at, when momentum is being regained here. So if we get a breakout, we've also got a breakout of this area here, and maybe somewhere in between. So we're looking at the mean. So we're looking at scaling in. We're looking at multiple entry levels. If we are going to do that, because we are at a resistance point, then what will be very key is that we have our stop loss. We want to, of course, leave enough space for the stop loss, ladies and gentlemen. So a lot of traders will put it below the 150 bar simple moving average. Some people will put it below the previous low. Now, some people make the mistake of putting it at the previous low here. You need to leave enough space for volatility within the market because that's also a support level. Keep that in mind. So we need to, of course, keep in mind an exit point within the market as well, because we are at that very key support level. We are at that very key resistance level. Now, what traders could also do if they wish is set a specific point. Like if we see enough of a decline, then at that point, I'll actually start to hedge and speculate downward price movement towards the stop loss. So that way, if we are going to be hitting our stop loss and we're not going to see, and instead of seeing a large loss, we will see a significantly smaller loss. Why? Because we're partially hedged towards our stop loss. But if we look at technical analysis, it's all indicating upward price movement. We're above both trend lines. We look at the smaller time frame, the 3-minute time frame here, we're above the 150 bar simple moving average. Some people on the 3-minute time frame prefer the 200 bar. Very famous, the 200 bar, and you can see that really is bouncing the price off on multiple occasions at that area. So very important, ladies and gentlemen, but all of them are indicating upward price movements. Even if we do see a slight decline, so for example, decline to here, it still is above the trend line. We're still seeing higher highs, but we just want to regain upward momentum. So for example, again, here at 61% momentum being regained, we have an indication there of upward price movement. Now, if we're looking at the S&P 500, the buy signal potentially will be slightly stronger. So you can see price is higher here on the S&P 500 compared to the Nasdaq. That's also partially because of the S&P 500's exposure to banking stocks. Banking stocks are at an all-time high, whereas when we're looking at the Nasdaq, they've got more or less no exposure to banking stocks. So this is one of the reasons why the S&P 500 is trading quite high, and also the Dow Jones is trading quite high as well compared to the Nasdaq. Both of them, whether we're looking at S&P or Dow Jones, both here you can see very clearly are trading above both trend lines. Even when we go into a smaller time frame here, we're above both trend lines as well. We just want momentum to be regained. We can potentially again look at 61% momentum being regained. Some people prefer 65, 70. Some people prefer the breakout. So if you're willing to wait for the breakout to take place, you of course can look at the breakout. And that would signal upward price movement. Now I've got a question here. I'll very quickly answer this question. Somebody says here, how can I get an account with HFM which has more money in it? You can use, well, it depends on your region and the promotions in your region. But if you speak to your local account manager or speak to the support team, they'll be able to assist you because there is deposit bonuses. So for example, if you make a deposit, we will, again, this is just an example, add an additional bonus to your account. So for example, if you're going to deposit $100, we'll deposit a further $100. So I'm not sure if that's what you're referring to. Your question is, how can I get more money into my account through a partnership, the gentleman states, and that's an option. Another option, ladies and gentlemen, is if you believe you are a good trader and you are a successful trader and you can help other traders, then by all means you can become a strategy provider. If you become a strategy provider, other traders copy your trades. If they see that you're successful at trading, they'll copy many more trades, and you charge them a performance fee. So basically a profit split if you make them a profit. And of course, that's another way of having a passive income. And like the gentleman's asking, see more money through partnerships into your account. Now, let's go back to our table here to look at the best performing currencies. So we can see here the best performing currencies is the euro, the Australian dollar, Japanese yen, the worst performing US dollar, like we said, but worst performing after the US dollar is the Swiss franc and Great British pound. So something which will be very interesting is to look at the British pound against the Japanese yen. So let's go to today's price movement. British pound against Japanese yen. Let's put the British pound against Japanese yen also here. So we can see here actually what is known as a symmetrical triangle pattern. So you can see lower highs, but you can also see higher lows. So we can see lower highs, but also higher lows, like so. Now, because of that, ladies and gentlemen, a lot of people tend to want to see the price break out of the higher or break out of the lower breakout point. A lot of people will also look at mean reversion strategy as well. So whenever they go very far away from the average price, they'll look at the average price of the symmetrical triangle, which at the moment we can see is 84 bars. So if we look at 84 bars on the simple exposure, there we go. So we're currently at the support point. So that indicates upward price movement, and we can see the average is at this line here. So a lot of traders, when we look at symmetrical triangle patterns, they look at the price increasing back up to the average, which is an increase of 0.09%. And we can also see that here, ladies and gentlemen, especially if we're going to break out a point above this area, which is a very clear price rejection candlestick pattern there. That will also be in line with the 200 bar simple moving average. If we break above that, then we start to see potential of stronger indications of upward price movement. Somebody says here, how can I have a one-on-one session? Somebody says, where can I find you? Ladies and gentlemen, we have on our website, if we go to our website, if you go under webinars, we do have multiple webinars which you can follow. So my name is Michalis, you can see me here. I have multiple webinars which you of course can follow. They're live webinars, you can ask questions, you can share your experiences. Each webinar is educational, looks at a different aspect of trading. So that's definitely something of course you can sign up to. You can sign up to it for free, watch as many webinars as you like. And that's definitely something that you of course can follow. There's also other tools that you can look at which you can see and get education from. For example, our online trading courses, which is about to be updated in the next 24 hours. You'll be able to see our new trading courses, which will be available to you. So here, ladies and gentlemen, we're looking at the price of the Great British pound against Japanese yen, increasing in value back to the mean reversion strategy. If it breaks though below the low, which means it will also break out of the symmetrical triangle pattern, then we would actually see the bias towards bearish price movements. So that's something, of course, we also will look at. Another thing I mentioned is the euro is one of the best performing currencies today. US dollar the worst performing. So of course, there's a benefit of looking at the best performing and the worst performing. 2-hour time frame here again. I'll change this back to a 75 bar exponential average. There we go. Here we can see very clearly the price is above our 2 moving averages. We're also almost above 60 on our hour side. So we have indications here of upward price movement. We can also see there's a retracement, but like I said, what we can potentially do is look at when 61% is regained. We can look at 61%, then the breakout, which is here, and then an average between the two, and look at multiple entry levels. I can see somebody says here, where would you put your stop loss though? A lot of people, they'll put it just below the previous low, or if there's multiple lows like here, we've got a reverse head and shoulder pattern, which is also an indication of upward price movement. They'll put it just outside of that range. The only thing to be cautious though is, if we put in a moving average there, that's 0.20% away. So there's no point putting the stop loss 0.20% away but then put in your take profit 0.13% profit, because that means you've got a negative reward to risk ratio. Ideally, you would like at least a like for like, if not even higher. So that's also something for you to keep into consideration. Somebody says, can we look back at gold? Of course, we can look back at gold. So let's go to a 3-minute time frame. So we've got a better scenario here. And also we'll compare the two with the US dollar. So the US dollar starts to increase in value again after a dip. Gold continues to decline, ladies and gentlemen, forming a retracement. Again, we got, like I said previously, if this continues to drop and it goes back to the low, for example, here, then we can look at on gold. Is gold trading below its intrinsic value? That's something, of course, we can look at. And what can help us to determine that is also the relative strength index. So we can see, if we look at the relative strength index, main resistance point is at the 28.5. So very close to where we currently were. Not yet at that point, but if we hit that point, doesn't have to hit the 25. If we hit that point, then most likely we'll also be at the trend line here. And if simultaneously the US dollar starts to decline again, then that could be a real indication that gold is potentially going to see a rebound. So that's something also that we will look at. I've got another question here. Is there a way to make money low risk? Guys, CFD trading is not low risk. You're trading with leverage. You're trading CFDs. It's not part of the low risk category. What you can do though is trade with an amount you're comfortable with. There's a lot of educational supports and webinars where we look at strategies, trading plans. We've got trading courses on our website as well. There's so much support that you can take advantage of. So no, there isn't risk-free trading or low-risk trading. It's an investment. But what you can do is start off with an amount which you're really comfortable with, have a real trading plan, real trading strategy, follow our webinars, get the education which you need, and you can put the stop losses, ladies and gentlemen, to ensure that you don't have a negative reward to risk ratio. I've got another question here. Somebody says it looks like gold is about to come back up. So that's something we just mentioned. What's really key for that, guys, is that gold is the US dollar to continue to decrease in value. If that decreases in value, we see the price movement, for example, do this back to this area here, and gold still hasn't increased, and we're at this trend line here, then that will be a scenario where potentially we have a signal that maybe gold will rebound at that point. So let's see if we've got some more questions. Guys, if you have any questions, feel free to ask. I'll be more than willing to assist. Somebody here says, can we look at the US dollar against Japanese yen? Yes, it's actually one of our most traded currencies. Now, if you're looking at the US dollar against Japanese yen, even though we're trading below the trend line, and also the moving averages are slightly pointed downwards, what we need to be cautious about is that we also have a support point. So because we're at a support point, ladies and gentlemen, be slightly cautious of upward price movement, especially because the GDP figure released today is something which is potentially positive for the US dollar. Ideally, what we would like to see, though, for the US dollar to really start to see strong upward price movement is for tomorrow's core PCE price index to actually indicate that the US Federal Reserve will not cut interest rates. Or if they do cut interest rates, they'll be very cautious about adding an additional cut in the remaining meeting during 2025. Either way, that can support the price of the US dollar, at least against the Japanese yen, which we thought will cut a further 0.5%. They've already cut already increased 0.5%. We want them to increase a further 0.5%. It's not something though that we have seen. If they continue to avoid hiking a further 50 basis points, then that's something that can really put the Japanese yen under pressure. So I can see a lot of thank yous. I can see some people are leaving the live session as well because we've come to the end of the session. So just a few seconds, I'll leave the live open. If anybody has any questions, feel free to ask now. Otherwise, of course, hopefully you found the session educational, hopefully you found it informative and it was helpful. Cannot see any questions popping up, so I think let's end today's session. Keep in mind that we have live webinars which you can also watch as well and register for free on our website. So guys, let's end today's session. Enjoy the rest of your day and the rest of your week. Good luck, and hopefully we'll see you very soon on one of our